Hello, everyone. Good morning from this part of the world. It's 9:34 a.m. West African time. That's about 8:34 a.m. UTC. And depending on what time zone you're tuning in from, I wish you a good afternoon and good evening. Hope we all had a wonderful weekend and pumped up and ready to be part of a potentially exciting new week. Once again, welcome to our very first Forex Morning Mastery session for the new week. I'm really excited to have you all here. Whether you're a regular or a new participant to our community, we are very glad to have you join us this morning. For those who are new with us, just a quick head up. We run these sessions 3 times in a week. That is Mondays, Wednesdays, and Fridays. So there is always something fresh to catch up on this platform. So moving on, this week we are going to be focusing on three assets as always. We are going to be doing follow-ups on the US All Spot, the USDJPY, and of course my favorite, which is the XAUUSD. So if you're passionate about any of these assets, you definitely don't want to miss today's insights. So we will be diving deep into the charts together. Also looking at the fundamentals to uncover what the latest market development means for each of these instruments. So, on the crude oil, there are some interesting situation unfolding in the crude oil market where we notice a rebound this morning. In fact, I already have a buy position triggered, which I will be letting you into. And this is coming after crude oil prices hit its lowest point in weeks, despite ongoing supply concerns and trade tensions. And on the USDJPY, we have some promising platform for the Japanese yen following a strong domestic Japanese data that came in this morning. And we are going to be looking at that. So stay tuned in if you're a USDJPY fan. And on the gold commodity, despite the US dollar's recent traction and profit taking, there's a strong demand for gold amidst trade war fears and inflation worries. So today we are going to be looking at what and how we are going to be capitalizing on any potential uptrend scenario on the gold, or if there is any chances that sellers could incite selling pressure on that particular asset. And during the weekend, I was able to share my thought process, my plans on the gold commodity. I hope you watched it. If you didn't, please check it out on my YouTube channel. It's somewhere around there. Please check it out so you can get yourself prepared for what we have today. So, with that being said, here we shall be diving right into the business. And as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for this week. And based on the assets we are looking at for this week, we are going to be focusing on impactful events from both the United States and the Japanese economic docket. Now, yesterday evening, I think late in the night yesterday, we had feature Japanese economic docket, and that is the gross domestic product annualized for quarter four. And we saw an impressive figure where the actual data beat the market participants projection of 0.3%. So we saw a 0.7% actual data showing a tremendous growth in the Japanese economy in the last 3 months, which is even beyond the previous quarter. So that is quite an impressive figure you see here. And this, of course, incited a positive reaction from the market. We saw the Japanese yen rise significantly this morning. We are going to be taking a look at that in a moment. Then today, Monday, February 17th, we are looking at there are no high impactful event today. So we are looking at speeches from Fed officials. We have Harker's speech coming in 2:30 p.m. UTC. We have Bauman's speech coming in 3:20 p.m. UTC, and of course we have Waller's speech coming up 11 p.m. UTC today. So these are the impactful events we will be looking forward to today. Then tomorrow, we are looking at the New York Empire State Manufacturing Index, a data that gives us an insight into the performance of the manufacturing sector in the Union. The previous month came in at a deficit of 12.6, so expectations are that there will be a little bit of which could be at -1. So we look forward to see what the actual data will be on that one. Then we also have a couple of speeches from Fed officials tomorrow. Then from the Japanese economic docket, we are looking at the export-import data, and of course the merchandise trade balance total for the month of January, all coming up much more later tomorrow. So these are the events we're looking forward to mark out this timing. And as we all know, the market participant will behave, and this will reflect on the chart as price action. So talking about price action, let's dive right into the chart. And of course, the first asset we are looking at this morning is going to be the USOILSPOT. And last week was quite an interesting situation for us. Remember, we sold the first half of last week, and not until the second half we begin to notice that sellers were finding it difficult to break through the $71 area, giving us signs that we are likely going to be seeing some recovery as we head into this week. Now, before we go into the technical details, let's talk about the things we want to be focusing on as we prepare to trade this asset this week. First of all, we want to monitor geopolitical development. In fact, this is very, very important considering what is going on. We want to stay alert to updates on the US-Russia meeting, which is coming up this week, and any signs that sanctions on Moscow might be lifted. This could lead to a supply increase and could weaken prices. So we need to take note of that one. Then we're also going to be keeping an eye on trade tariff news. We are going to watch for any changes in the US reciprocal tariff situation, where favorable news could help sustain price gains, while any unexpected moves may lead to volatility. Then we are also going to be tracking global demand indicators. We want to monitor global demand in mobility, which will obviously will be reflected in the EIA, of course, if the OPEC will release any data during the course of the week, and if there is any signs of high increase in fuel consumption, this could bolster bullish momentum for the crude oil. And then from a technical standpoint, with the way price is at a critical area where we are seeing signs of a rebound around the $71 area since last week Thursday, we will be considering buying on pullbacks at key support levels to take advantage of a potential sustained rally if supply constraints re-emerge. So this is what we are going to be looking at, and I will be translating this into technical details on the chart very soon. But before that, this morning we've seen some positive traction thanks to optimism over trade tariff delays, surging global oil demand, where from the record I was able to read from the Reuters news yesterday, we saw that global oil demand has risen to 103.4 million barrels per day, with a noticeable uptick in demand for mobility and heating fuels, which narrow the gap between actual and projected demand. So for me, the path of least resistance as at this morning is looking very bullish for the crude oil prices. However, we're also going to take into account the potentials that sellers could also come into play, especially if we will consider the easing supply concern from peace optimism that is surrounding a potential peace deal between Russia and which could lead to the removal of sanctions on Moscow, and this could increase global energy supplies and put downward pressure on oil prices. So these are things we want to be taking into account while we review the current market structure. And like I did say earlier, I already have a buy position triggered on the US crude oil. If you look at the trading panel right at the bottom of your screen, you can see that I'm already running in profit of about 14 pips thereabout. And I will be explaining to you in a moment why I have decided to. Now, before we go into the details this morning, let's take a quick look at the holistic perspective. Let's look at what has been for us since the beginning of this year. So to do this, we will scale up into the what I did here was to take into account the character of price action since the month of was what I was able to come up with here. I'm not sure what happened. Okay, so we have it right here. And if you look at it closely, you will see that since the month of January, the price of crude oil had consistently found lower lows and lower highs. And this have resulted into a couple of descending trend line you can see on my screen right now after connecting the series of lower highs. Now, this is my major descending trend line. And look at how beautifully price action had respected the trend line since the month of January, and not until last week we saw price break out of that descending trend line for the first time in about 4 to 5 weeks, came back to retest the structure to show potentials that buyers may likely be taking over this market anytime soon. Then another interesting thing I would also like to call our attention to is this. Now, despite the fact that price has been finding lower highs for about 4 weeks, we noticed that as soon as price got into the $71 area, since the beginning of this month, sellers have found it difficult to break through that structure, making it a beautiful support line going into the new week. So you can see every attempt by sellers to break through has always been met with strong resistance from the buyers, and this also happened this morning, especially during the Asian session. We saw how sellers found it difficult to break through the $71, making it a potential platform that could incite buying pressure going into the new week. Now, in addition to all of these structures, I have my key level at the $71.50 area, where I will be looking at adding more buy position if price action breaks out of that structure. Now, look at what is going on here. We have something that looks like a double bottom structure where that key level is serving as the neckline, and of course we need price to break out of the neckline to validate that reversal pattern. So it's quite an interesting setup going into the new week, and let's look at what has been going on since the new week has began, especially above this descending trend line. And to do this, we will want to scale down into our execution time frame, which is the 1 hour time frame. And in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, you will see 9, 10, 11, 12 hours, you will see that the week's a strong bearish note right below the $70.85 level, dropped into that same $71 area and rose back into that resistance line, giving us a range bound structure where price is currently confined within the $70.85 level and the $71 area to emphasize the prevailing uncertainty at this point in time. And of course, you know how we use range bound structures in this community. We do understand that when there is a range bound, that is, price is confined within a specific range, it tells us that negotiation is going on within buyers and sellers. And due to this indecision, we want to for a signal to come, which will come either in the form of the breakdown of the support line to give us an opportunity to sell, or the resistance line to give us an opportunity to buy. So with this in mind, I was able to place a buy stop order above the $70.85 level to capture that bullish move, and thankfully I can see price had already broken out and triggered the buy position, currently running with about 12 pips in profit at this point in time. You can see it right at the bottom of your screen, right in the trading panel we have there. So for those who missed out, you could still join the buy from this particular area, and hopefully price continues to climb. If it does, the breakout retest of the $71.85 level will definitely be welcoming more buying ideas. So this is how I will be willing to continue an uptrend scenario on the US oil spot for this week. Now, you know how we do it in this community, in as much as we're holding on to a bullish bias due to a lot of factors like the US pressure on Iran, where US efforts to drastically cut Iran's oil exports could tighten global supply. We also have surging global oil demand at the moment and optimism over trade tariffs delay, which could support the uptrend scenario. However, concerns about easing supplies from peace optimism surrounding a potential peace deal between Russia and Ukraine could incite selling pressure in this market. So we cannot ignore the potential that sellers could come into play as well. Now, if that is going to be the case, that is, if sellers are going to be taking over this market, where and what area will it be reasonable for us to join a sell? So for me, since we have a range bound structure already where price was confined within the $70.85 level and the $71 area in the last 11 hours, I want to see price break down the support line of that range bound structure at the $71 area before joining a sell. And in fact, by the time price breaks down the support line, I think that we will be within a selling niche right below this descending trend line set on the 4 hours time frame. So if price can stay below the $71 area, continue selling pressure here, all I just want to see is signs that buyers are finding it difficult to stay above that descending trend line, and I will be willing to join a sell. So in fact, I will sell stop order just right below the structure, just in case I'm not around at my workstation when price gets into that area. So I will just do that right away, place a sell stop order, and let's see if we will get that position triggered. And of course, I will definitely be giving us an update on both my TradingView and Telegram platform if there is any new update that comes up along the line while we monitor this current market structure. So in the meantime, we maintain a bullish bias, but we are prepared to join a sell if price action drops below the $71 area. So that is my simple view on the US oil spot for this week, for the first half of this week. I do encourage us all to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are questions before we move on to the next asset on our watch list. Stay tuned in. So I see you, Alexandria. Good morning to you. You are very much welcome. Glad to have you around with us this morning. All right, so in the absence of no questions, I want to assume that we are all on the same page at this juncture. I do hope you've marked out the structures accordingly on your chart, as you will be needing them as a reference point to guide your decisions today. So with that said, let's move right into the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the USDJPY. And of course, if you look at this chart this morning, we saw that the week started on a strong bearish note thanks to the strong domestic GDP report. We saw Japan's GDP expanded by a whopping 0.7% in quarter four, with a yearly growth accelerating to 2.8%, reinforcing expectations for further Bank of Japan rate hikes. And this will continue to support the Japanese yen at this particular point in time. And of course, this has also led to a situation where a potential interest rate hike could could narrow the US-Japan rate differential, which will bring attentions of investors to the Japanese yen, and the current weaker US dollar is also helping keep the USDJPY pair suppressed in the meantime. However, I still feel that the US dollar still has a chance to emerge from this particular juncture due to a potential reversal setup gradually unfolding around this area, which we are going to be looking at in a moment. And of course, if we take into account worries that Trump's reciprocal tariffs might target Japan, could make investors a little bit cautious in investing in the Japanese yen, and this could take some aggressive position in favor of the US dollar against the Japanese yen. And then if we are going to be monitoring this market for this week, that is, if you are a USDJPY fan, there are a lot of things that you need to also monitor during the course of the week, like we want to be keeping an eye on inflation figures from Japan. I think Japan's inflation figures will be coming in this week. I think, let me check again. Okay, so you can see here, we have it here on Thursday. We have the National Consumer Price Index. We have the CPI excluding food and energy. These are all inflationary data that we want to also be monitoring. If the data comes in higher than expected, it could favor the Japanese yen. So we want to be watching that. We also want to be watching tariff development as well. So we want to be cautious of any news regarding US reciprocal tariff on Japan. So if there is a resolution or clarification on this, it could lead to a swift change in the market sentiment. So this is one thing we also want to be taking note of. Then we're also going to be paying attention to economic event from the US. For this week, we are looking at S&P Global publication, and we have a bunch of speeches from Fed officials. Then we also have the initial jobless claim count coming in on Thursday. We have the publication of the FOMC minutes meeting coming in on Wednesday as well. All of these are important events that will be influencing the US dollar market dynamic. Then with all of this said, and like I said, I still have a strong feeling that the dollar may rise from this particular area, considering the inability of sellers to break through the 151.5, which we will be looking at in a moment. And for us to buy, we want to wait for strong follow through before buying, given the mixed signal, considering waiting for confirmatory technical signals before committing to long positions on the USDJPY. So now I don't want to bore you with too much of the fundamentals at the moment. I think those are the major ones that we need to take into account while we monitor this market. So let's scale up into the 4 hours time frame. Let's look at what is really going on from an holistic perspective. Do we have any structural detail that can help us navigate this market this week? Well, what I did here was to take into account the character of price action since the month of December last year. And if you look at this area critically, you would realize that the market has been on a strong bearish note. And in fact, this had evolved into a descending channel. So look at the support line of that descending channel. And then we have the resistant line of that descending channel right here. So price is still within the descending channel, and this further emphasizes the strength of the sellers at this point in time. Now, if we zoom into what went on last week, we saw a reversal setup evolve around this area above the 151 area, just exactly at the support line of that descending channel. So to give a visual representation of what I'm talking about here, so you will see that following this impulsive bearish leg, we saw price evolve into a double bottom structure where the 152.00 area served as the neckline for last week trading activity. And remember, we bought the breakout of the structure last week, taking advantage of over 250 pips move before price dropped it back into this particular structure. And for me, while looking at this chart, prior to the beginning of this week, I was banking on the $152 area as my key level for this week. Look at how that level also doubled as the neckline of this reversal pattern here. So I was thinking that price may likely come back into the structure, build up some momentum to continue that uptrend move. But as you all saw, the GDP from the Japanese economic docket was so impressive, and this caused an immediate positive reaction for the Japanese yen buyers, as we saw price drop below that structure, and it appears the momentum wants to continue to the downside. For me, I'm still not willing to join a sell at this point in time, and the reason is basically because of this support line here at the 151.00 area, which has been a barrier for sellers in the last 1 week. So for me, I will still continue to monitor price action around this area, though I already had a buy position around the 152.00 area. You will see it right screen, and they are currently running in a loss of about 16 pips in total. And I may close this trade anytime soon if I see what is going on the 1 hour time frame. So this was my initial buy window, but it's appearing to be invalid at this point. So we want to scale down into the 1 hour time frame. Let's see if there is any structural detail that we can use to give us a decision below the 152.00 level. So scaling down into the 1 hour time frame, this was what I was able to come up with here. So what I will do now is I'm going to place a sell stop order right away before the market. I will explain to you why I'm doing that, but let me just place it first of all. So I'm placing a sell stop at 151.721. You can do that if you don't mind right away. And the reason why I'm doing this is quite simple. Now look at the structure here. The week started on a strong bearish note. We know why that happened. Price started below the 152.400 area, broke through our key level at the 152, and then we saw some support area here. Price came back, and it appears that this could incite a downtrend continuation if market participant finds it difficult to break out of that key level. So because of this, and for the fact that price remains below the key level, I have placed a sell stop order below the 151.750 to continue the downtrend move. And if price goes ahead to break down the this level here at the 151.475, I will be willing to add more sell positions to my existing trade. So I will just include another sell stop order below that structure right there. So I think this is quite clear as regards to the bearish expectations on the USDJPY. Now for the bullish expectation where I have already bought this asset, is it time for me to close this asset at this juncture? This support line at the 151.475 will make me hold on to that buy, so I can, let me say, put my stop loss, move my stop loss to 151.575 area, somewhere around here. That's the previous low here, so I will just move my stop loss. So if I get taken out, I'll be taken out in a loss, and then I will have a sell position triggered. So 151.580 on that one, and then we have my sell stop order placed right here too as well. And let's go back into the chart. So this remains above the structure. We maintain a bullish bias. Now, one that is if price evolved into something new, which we did not talk about here, I will definitely update us on my Telegram platform. So let's see how the market will play out for the next best of luck on this one. If you have any questions, feel free to. So I will